Brian, let's talk about why you may want to pay more in income tax now versus later. What are the determining factors to figure this out?
Yeah, it sounds like kind of counterintuitive. You know, why are you saying I want to pay more income tax? What, are you crazy? I always want to pay less. Well, that's not generally the case. Effective tax planning has to do with having the long haul in mind, multiple years in mind, where you have options as to when you recognize certain kinds of taxable income. And probably the easiest way to say that is, let's say that you have a big windfall coming one year. Well, most of that money is going to be in a very, very high tax bracket. And you know, all money that you earn is not taxed all at the same bracket. Even an individual will have a certain amount of income tax at 0, certain amount at 10, 12, 22, 24, 32, on up. And so leveling that out, we call level loading the income, can be very critical in paying less over time. Because if you have enough money coming in, you're going to pay tax, but the goal as a tax planner is to pay the lowest average rate over a multi-year period, rather than bunching it all up in one year and then having another year that has a very low brackets that you did not take advantage of.
Brian, when is it not possible to spread income over several years?
Well, your earnings, for instance, when you earn money, you get paid. You can't defer that. You're not allowed to. So when you receive it, you're going to be taxed. But there's a lot of things we have choices about. You choose when you're going to take a distribution from your IRA. Outside of a required minimum distribution. You choose when you're going to sell your stocks. You choose when you're going to sell real estate, or if you're going to do a 1031 exchange. So there's a lot of things that we have control over as to when we're taxed on them. And knowing that they're coming up might be an opportunity to say, all right, I don't want to take a bunch of money out of my IRA account in the year that I'm selling stocks or my business. And so you might do that in another year, or you might do Roth conversions along the way, or you start doing some tax planning that levels out your tax rates. So I've heard about people saying, hey, get out of paying income taxes, and they might be talking about putting your money into life insurance products that can help, or Roth conversions, that kind of thing, which is great. That may be a component of it, but it's very difficult to get out. If you've made substantial money and have substantial assets, it's very difficult to get out of income taxes at all. So I'm just suggesting, if we're going to pay income taxes anyway, we want to pay them at the lowest average rate.
Is level loading taxes a consideration when you're offered something like a lump sum payment versus a monthly annuity?
Yeah, absolutely. A monthly annuity or installment sale, pretty much anything. That's why I'm kind of excited to put this series together, because we're talking about financial planning topics. But being a CPA, I'm always looking at that. It seems like every financial decision has an income tax element, and it's not just as simple as how much is my tax going to be. We might have some control over what that's going to be by looking at other parts of our life as they interact with that particular transaction.
If you have a year in which you have arranged to pay no income tax, is that going to present problems down the road?
Yeah, because you're going to have income coming in other years that's going to be at a higher bracket. So if you came to me and said, yeah, I had a really off year, and I had this, somebody said my business lost 100 grand, and that's what my tax return shows, is negative 100 grand. I said, well, why don't we move 200,000 from your IRA into your Roth? So in that case, the first 100,000, the tax rate is 0, and it's going to earn tax-free the rest of his life. The next 100 grand, the tax rate was about 10% on average, and so that was a great solution for that person. So level loading, we're leveling it, and now that 200,000 won't be stacked onto another year. Maybe the next year he was way up in earnings, and that would all been taxed at a very high rate, maybe 32%. Instead, we got an average of 5%.
Brian, thanks for telling us more about why we might want to pay more in income tax now.